it's been a really tough environment for trend, because if you look at, I mean, let me just make one point here. The 50-day moving average for the S&P has recovered in the last 6 days to be only 2% down. I mean, we basically went from everything's going wrong back to, well, I guess it's okay. And so the world is just, from a trend perspective, shifted significantly. And some of the new trends that we're seeing, they're
Right.
weak, but they're very different.
I'm going to go to August 6th, and folks, this involves Wells Waldo, parabolic SAR, all sorts of fancy things, a thing called ADX DMI. Kaminski got an A+ on the exam. I got a C-. She ruined the curve. Katy, I'm looking at a lot of fancy quant technicals, and what I saw is a jump condition. How do you get back on trend after a jump condition?
Well, this is a good question, because what happens when you have such a big move is it adjusts trend signals a lot. So you have to think a little bit about the type of trend filter that you're using. Some models are going to be much more like your classic moving averages, and those really adjust aggressively when you have that type of move. But you can also use other types of models that may sort of Windsorize or remove some of the outliers, and those may not be as much affected. But the truth is, there may be information in this recent event that could be foreboding for potential trends to come.
Katy, let's Windsorize together. You're talking 200-day moving average. I'd like to focus your attention on credit spreads, specifically sovereign credit default swap spreads, 5-year. 15 of the 25 riskiest issuers, their spreads are below their 200-day moving averages. Spreads barely moved in the recent sell-off. Talk to us about the signals you're taking away from the credit market.
So the challenge with the credit market is not everything falls in one particular drop. And I think what I'm thinking about for credit is, if you think about past crisis periods or other recessionary periods, it doesn't hit all markets at the same time. So I'm concerned that this recent event could just be a little bit of a warning signal that, things are not necessarily going to be as soft as we would have liked, and that we could see a more of a recessionary trade in the fall if we see more weaker data.